The Bank of Uganda, at its Monetary Policy Committee meeting of August 2021, decided to keep the central bank rate on hold at 6.5%. The MPC noted that the second COVID-19 wave and associated containment measures have interrupted the economic recovery. The economic growth is expected to noticeably slow down in the quarter September 2021 due to the pandemic containment measures. Indeed, high-frequency indicators of economic activity indicate that the momentum of economic activity for the quarter to July 2021 has subsided. The COVID-19 restrictive measures that remain in place will continue to weigh on economic activity, with economic growth projected in the range of 3.5% to 4.0% in financial year 2021/22. In particular, between COVID-19 stops and starts, tourism is unlikely to return to normal levels anytime soon. However, if vaccination picks up in the latter part of the year and movement restrictions are eased, this will allow for a gradual economic recovery. Nevertheless, the lingering impact of the pandemic on private sector finances is expected to weigh on output over the next 2 years. Economic growth is projected to return to 6 to 7% in fiscal year 2024-2025, indicating that economic activity is expected to remain well below the pre-pandemic path for an extended time. A rebound of economic activity will be sustained by an acceleration in private consumption due to pent-up demand and strong growth in external demand, which should contribute to a solid pickup in exports. In addition, a gradual return of tourism the final investment decision in the oil sector and travel-based improvements in business confidence should also provide support to economic growth. Significant uncertainties continue to surround the economic outlook, however. The outlook continues to be highly conditional on the consignment of the spread of the pandemic, which will be premised on the vaccination rates and the extent to which SOPs are observed. The emergence of vaccine-resistant variants would, however, prompt the reintroduction of restrictions on gatherings and mobility, which will derail the economic recovery. Conversely, reduced spread of the virus and a faster rollout of vaccines could speed up and strengthen economic recovery relative to the current projections. Inflationary expectations remain benign, reflecting the existence of spare capacity in the economy. The headline and core inflation averaged 2.4% and 3.4%, respectively, in the 12 months to July 2021, which is below the Bank of Uganda's medium-term target of 5%. On the monthly basis, the annual inflation edged slightly higher to 2.1% in July 2021 from 2.1% in June 2021, in part due to an increase in food crop prices. However, annual core inflation declined slightly to 2.5% from 2.7%, primarily due to a decrease in prices for services. Inflation will rise gradually through the year due to temporary effects of the pandemic containment measures, but is forecast to remain below the 5% target in the near term, as excess capacity continues to exert downward pressure on inflation. In the medium term, as demand recovers with the reopening of the economy and the release of pent-up demand, inflation is forecast to rise, but stabilize around the 5% target of the Bank of Uganda. Uncertainty around the inflation projection remains high. The Bank of Uganda views these risks as currently balanced. On the downside, the current projections assumes continued low-level transmission of the virus. However, possible flare-ups of the virus and the spread of more contagious variants could trigger a stronger resurgence in infections. This in turn could lead to a reimposition of containment measures and dampen domestic demand. This would exert downward pressure on domestic inflation. On the upside, adverse weather-related shocks could cause food prices to edge up in the coming months. Additionally, global commodity prices, especially oil and other input prices, have been on an upward surge since May 2020. And this could add to an increase in domestic prices, especially as the economy fully reopens. Rapid global producer price inflation could increase these inflation risks. In addition, financial conditions in advanced economies could tighten substantially if the recent upswing in inflation was to persist, which could spill over into the domestic economy through capital outflow and a more depreciated exchange rate, while still dealing with the virus outbreaks and at a relatively early stage of recovery. Furthermore, progress in vaccinations and reduced pandemic-related uncertainty could boost confidence by more than expected. As a result, households could increase their spending faster than currently assumed. Aggregate demand would then be stronger than projected and contribute to greater inflationary pressures. The MPC assessed that the risks to the economic growth outlook are still on the downside, that there remains considerable excess capacity in the economy, and that there is a persistence of high uncertainty. Against this backdrop, the MPC judged that keeping the CBR unchanged at 6.5% would be consistent with meeting the inflation target of 5% sustainably in the medium term. Consequently, the MPC decided to keep, as I said at the beginning, the CBR unchanged at 6.5%, and this will be consistent with meeting the inflation target of 5% sustainably in the medium term. The band on the CBR is maintained at plus or minus 2 percentage points on the CBR, and the margins on the rediscount rate and the bank rate have been kept at 3% and 4 percentage points on the CBR, respectively. Consequently, the rediscount rate and the bank rate have remained at 9.5% and 10.5% respectively. The Bank of Uganda credit relief measures shall expire on September 30th, 2021, but the Bank of Uganda shall, on a case-by-case basis, put in place policy interventions for those sectors that remain under lockdown. Furthermore, in order to ensure financial stability, as the credit relief measures expire, the Bank of Uganda has maintained the COVID-19 Liquidity Assistance Program, CLAP, in force until further notice. I thank you for listening to me. This is the Governor of Tumusiime-Mutebile, in a statement authored today, August 12th, 2021. I thank you for listening to me.